Tesla has been growing its vehicle sales at the fastest pace of any automaker in history, even surpassing the ramp-up speed of the Ford Model T in the early 1900s, which is significant especially since electric vehicles are much more complex than early cars to manufacture. Even just last month, in May 2022, Tesla grew sales at 60% according to auto data, while other major manufacturers saw massive declines compared to the same month last year. However, despite Tesla's incredible growth trajectory, media outlet Reuters stated that they had seen emails indicating that Tesla CEO Elon Musk has a super bad feeling about the economy and will be cutting 10% of salaried staff. Tesla stock took a huge hit after this article was leaked, sending shares down an astounding 9.25%. While Tesla is seen as a barometer for the health of the rapidly growing EV industry, this announcement of layoffs seems to be raising concerns by many about demand, especially for Tesla's own vehicles. Now, this announcement of layoffs comes just days after Elon Musk sent out internal emails to put an end to the working from home trend at Tesla. He's calling for employees to come to work for a minimum of 40 hours per week, or effectively resign if they don't want to come back to the office. If that warning wasn't enough, now employees need to also worry about being laid off as part of the job cuts that Elon Musk is said to be making. However, this isn't the first time that Elon Musk has laid off the bottom 5 to 10% of the company, and the current actions may not even be this drastic. But back in June of 2018, Tesla laid off 9% of its workforce in a company-wide restructuring, saying that this would not affect the Model 3 ramp-up, which was critical at the time. And then, just 7 months later, Tesla cut another 7% of its workforce in January of 2019. Coincidentally, the shares dropped back then as well, also falling 9%, just as they did this past Friday on the back of the most recent announcement. Elon Musk painted a bleak picture for the company back then, which spooked investors, and the company had indeed struggled to find its footing with regards to ramping up the Model 3, an essential product for Tesla that determined whether or not the company would survive. In hindsight, Tesla was actually close to bankruptcy at the time. The company also had a mountain of debt, over $11 billion, but just under $4 billion in cash reserves. Ultimately, however, Tesla's shares have rallied over 1,100% since that time, as the company was in fact able to execute on the Model 3 ambitions and scale production despite any sort of layoffs. And by the way, stop using Yahoo Finance, stop using Google Finance, and have a look at our website, themarketisopen.com, where we have instant stock quotes and financial data going back 10 years, and it's all freely available. Today, Tesla is in a much stronger financial position with $17 billion in cash on hand and almost no debt. About 5 months ago, Elon Musk forecasted that a recession would be coming sometime between the spring of 2022 and 2023. And in the recent All In podcast, he said that he believes we are already in a recession. Now, to quote Andy Grove, who was the CEO of Intel, he stated, "Only the paranoid survive." And Elon Musk seems to be keeping these words close to heart by acting quickly and being prudent to get ahead of and position the company to weather a potential downturn, but also to continue to invest in order to come out even stronger. And so he's preemptively trying to get employees back into offices and laying off underperforming workers in order to keep the company lean and focused during these tougher economic times. Tesla now has gigafactories on 3 continents, and so Elon sees the data on a more global basis, given that Tesla is a large buyer of materials and goods from many suppliers and also a large seller of products. During the All In podcast, Elon even says that a recession could be seen as a good thing, as during boom times, there's a misallocation of capital and it starts raining money on fools. Recessions are meant to correct this, essentially. Now, this may be true to some extent to Tesla, which in the last year and a half or so has hired about 40,000 employees. Elon's email reads that Tesla will be reducing salaried headcount by 10%, as we have become overstaffed in many areas. Note this does not apply to anyone actually building cars, battery packs, or installing solar. Hourly headcount will increase. And he later clarifies on Twitter, saying that the total headcount will increase, but salaried should be fairly flat. That almost seems like the opposite of the first email. And so it appears like the company is really just refocusing and reevaluating, making sure that all of the employees are doing something useful, like actually contributing to the company's core products and services and bringing more money to the company than they take away. And this will result in Tesla continuing to invest throughout any downturn to come out even stronger at the other end by moving faster than their competitors. Now, of course, people are jumping at the idea that Elon talking about layoffs right away means that Tesla has a demand problem. But these people either aren't paying attention or are purposely trying to spread negative news about the company, because in reality, Tesla has an overwhelming amount of demand, so much so that they simply can't keep up with their production. And coupled with now elevated gas prices, more people than ever are looking to go electric. But at the same time, lockdowns in China are causing even more global supply disruptions, which are resulting in deliveries being pushed back months from Tesla's factories in the US and even in Europe, where sales still rely heavily on China. So this is in no way a demand issue and won't be for many years to come with regards to electric vehicles. If anything, the layoffs could be related to profit margins at the company. Tesla has raised prices of its vehicles due to skyrocketing material costs thanks to inflation and unmet demand for raw materials. But this assumes that Tesla continues to deliver at the same or higher rates of production. If production falls due to disruptions, as we saw in China in April and May, then Tesla is effectively paying for the factories, for the employees, etc., and fewer cars are being made. In the short term, that will affect profitability, and we saw in 2020, during the pandemic, that Tesla cut wages across the board when the lockdowns began. And so what Elon is doing today is a similar way of cutting excess fat within the company. Actually, one interesting perspective for investors is that in the past, Tesla has taken a one-time charge, usually a restructuring charge, when they lay people off. This shows up in the company's earnings numbers. And so if China is weak in the second quarter already, then it actually makes some sense to make the quarter even weaker with layoffs, which are a one-time hit. In the short term, it would be a negative for investors, but really it's likely going to be a bad quarter anyways. If all of the layoffs are completed in June, however, then it only affects the current quarter, allowing the second half of the year to be stellar, as Tesla is back up and running in Shanghai, has all 4 factories, Berlin and Austin have some time to ramp up even a bit more. Alternatively, if Tesla waits for things to get worse before laying people off, and then there's layoffs in the back half of the year, it will drag on and affect investors for yet another and another quarter. Not to mention that reducing headcount or slowing down hiring while trying to increase employee productivity will further improve Tesla's financials in terms of cutting costs. This isn't to say that Tesla would save a lot of money by firing everyone, but instead more along the lines of doing more with less. What's interesting is that competing car makers may be doing the exact opposite. When asked about Elon Musk's super bad feeling about the economy, President Joe Biden mocked Elon Musk, wishing him lots of luck on his trip to the moon, and pulled out his notes to begin talking about Ford hiring more union employees and Stellantis, formerly Chrysler, also spending to add more jobs. But these companies have already seen massive sales drops. Stellantis, for example, already down 30% in May, but according to the president, continued to invest aggressively as if there's no downturn at all. Effectively, they're selling less product, but paying more staff at a time when Elon Musk is looking at freezing hiring, and yet Tesla is actually growing their sales. And it's not just Elon Musk who's raising alarm bells, but also Jamie Dimon, CEO of JP Morgan, sees a hurricane on the economic horizon. If these latter two turn out to be right, then the entire auto industry, specifically those companies relying on expensive gasoline to fuel their inflated price products, could see even further declines. Currently, they're benefiting from higher prices due to scarcity, but if ICE vehicle demand begins to dry up, which is usually what happens in a typical recession, they will need to reverse their strategies and cut back and lay people off at a time when Tesla will be prepared to take real market share. So which of these perspectives do you think is correct? Tesla's plan to cut back and refocus, anticipating a recession, or other companies that appear to be investing as if there is no recession while their businesses are in decline? And do you trust Tesla's track record to navigate difficult times and come out even stronger once the smoke clears? Please hit the like button and subscribe. We would really appreciate that. And a huge shout out to all of our patrons that help to support our channel. Your support helps us to continue to make great content. Thank you guys so much for watching.